And if anyone also has questions, they can also use the Q&A panel and send it over, and then we'll try to take it up.
Thank you. Bye-bye.
Nice to meet you all.
Thank you. Okay, so with that, maybe it's now we have around half an hour to get into like the real discussion, and we have some questions for that. I mean, just to start with, I think it's very basic to know how do you think is the current sense in the investment mode. Maybe if we can start, for example, in Germany and Europe. Andreas and Carsten, if you can give some perspective on that, and then we can also go towards how the current sense of investment is. In India or Asia, based on Lakshmi and Bharat, your current understanding of the scenario. So if you can go ahead and start giving your perspective on this topic.
Yeah, I think actually we have to differentiate between, let's say, startups and the investors or the funds. I mean, among the startups, of course, we have winners and losers due to the pandemic. I mean, for sure, those that are, innovative in digital, healthcare, also entertainment, they're for sure on the sunny side. Others that are, working on like things like travel or even mobility, they have more issues also to get funds. So actually, I think initially it's for many startups, the issue was not as visible already, but then with the progressing disease, it became more and more evident, and as a consequence, the startups were working very much on their, reducing their cash burn rate. But I think Carsten can elaborate on that because they are also have been launching some measures and courses. Regarding the investors, in my view, it was visible that there was clearly a focus on existing investments. So there was basically a decline and reduced appetite for new assets in the portfolio. And it was also visible that there were, internationally less cross-border investments. So it means the focus was on national startups and to maintain the existing portfolio. But Carsten, you are even closer here.
Yeah, I could basically agree to what has been said. The good news is that the situation is much better than we expected it in April or May, because in April or May we feared that the whole market would break down. This was not the case. Although the situation is not easy for everyone. As Andreas mentioned, there are a couple of startups in fields that have simply no revenues and no revenues in sight for the next couple of months. And of course, they have difficulties to find investors as well. On the investor side, as Andreas just mentioned, some of the investors are taking care of their existing portfolios, so they don't even want to look at things, not to get some appetite. That's the situation. But the good news is it's a minority. Where we do not see any friction is the private side of money. Business angels, they are investing like not quite as they did before, but still very focused. But the activity there is still pretty high. In addition, the German government came up with a couple of initiatives that are now, or that have just started about a month ago, that can help the startups in a significant amount of money to overcome any potential gap or the potential gap that is that we are seeing ahead. Although for the near future, I expect a strong dependency, especially in the Bavarian area, for startups that are very dependent on the German industry, and we will see how fast this will pick up again. And since exports and stuff like this are low, we will see, and very much will depend on the next couple of months, I think, because the Bavarian startups are mainly in the B2B space rather than in the B2C area.
Thanks a lot, Carsten and Andreas. Over to you, Lakshmi and Bharat. What do you think of the similar scenario of India? That how is the current sense? Are really investors in the mood to invest, or what would be your perspective?
Lakshmi would like to.
Yeah, I can. So obviously, I mean, to echo some of what Andreas and Carsten have said, there are certain sectors that are more badly hit. They are no longer the investors' darling at the moment. But that's the flavor of the season. And I'm sure that will change. So just a word for those who are in, industries that are not currently, having any immediate, love from the investor community. Don't lose hope. I think you just have to stay in there, because if you're really solving a clear pain point, it'll all come back. And I think, again, what was mentioned earlier in March, April, or late March, and especially when India went into lockdown, and India has been one of the only countries that has been in such an extended lockdown, I think it was far more grim. I think about 4 or 5 weeks later, I think people started realizing that this is, going to, this uncertainty is going to remain, and understanding what are, to some extent, what's really like the pros and cons, what are the sectors that are really permanently hit, and what are temporarily hit, and then what actually can be doubled up on. So the sectors that have emerged winners are very obvious sectors. EdTech, education has definitely been one of the biggest winners, followed by digital health, another huge winner. Entertainment, as was mentioned specifically, while OTT has been, at the forefront in different ways, I think games has emerged as a huge, another big winner. If I have to pick, top 3 sectors that have become, sought after, it's definitely these sectors. And the sectors that have been hit, anything which is non-essential, focusing on consumer markets, they've all been hit. Travel has been hit, fashion, all of these segments, other marketplaces, non-essential categories are all, facing big hits. But that said, again, I mean, we have been actively investing. We see this also as an opportunity. 2 things. We're seeing good, resilient entrepreneurs stick through, and if they really believe in what they're doing, they're continuing to do what they're doing. They've learned to be more frugal, and they're raising funds. So we're seeing good entrepreneurs still staying out there and looking to meet good investors. We have continued being very actively looking for good investments, and we've seen the same thing in the ecosystem as well. There are a lot, especially early stage is the one which usually needs most help in the very early stages of their entrepreneurial journey. So in the early stage, we continue seeing interest. To be honest, among the angels, it's a mixed bag, right? There are a few maybe angels who are, especially the professionals who are coming. Perhaps there might be a little slowdown there, but then India is a country which has a huge volume of angels. And, compared to that, our startups are probably still, still emerging in terms of volume. So I feel like the capital is out there for good startups to find, good startups that have, solving great problems. Just to put in context, although, significant funds have just been going into the large edtech, and for example, last week alone, we closed about close to $690 million in investment just within that 1 week. Although they are big ticket checks for more established companies, but just to give in context, I think everyone's coming back. We are seeing new funds coming into the country as well. They continue seeing India as a huge opportunity. So I'll pause with that. I think it's a great time to see more new entrepreneurs also come on board.
So I actually also pretty much share all the sentiments. Thanks. So,
so maybe Bharat, please go. I mean, Lakshmi already pointed out some of the top sectors, right? Based on your understanding, do you think that is it really the same, or do you have any contrasting picture of that?
Yes. So first of all, I would like to thank so already Are you able to hear me?
We are.
We're
but-
losing you in between.
Hello?
Please go ahead.
Okay. So whatever whatever the sentiments expressed by the others, I completely agree. But I have something else to tell you because I have two startups that I'm still part of. I would say there are no more startups. One area is energy. I see these startups, smart energy startups, and so on. And then the second area I see is digitalization. Another company that I listed in Oslo Stock Exchange. This is into building digital communities. And I can tell you that there's a huge upsurge of demand. We used to get 60 inquiries, a month. Now we're getting 50 inquiries a week. So it is like I can say that this proves that there's a demand because people cannot have communication or digital interactions. So the digital communities is another big demand I'm seeing. And so, in terms of also like what has happened over the months, we can say initially people thought, okay, this is going to go away, right, in about a month, right? And then the reality dawned that it is not so. And now people are kind of reconciled to the fact that it's going to be here for maybe 3 years. So you have to, factor this into whatever investments you make or, your innovation that you're creating. You have to, factor that COVID is part of this. And, unless you factor this, you're going to run into major problems. And so this is what I would like to, convey to the team or startups which are here, or the audience. They may be entrepreneurs. So I would like to say that you may be doing some things in the past, but look at how you can factor this for the future, so that the next 2 years you have to ride through. And many, let's say like investors, myself, right? People say that yeah, first you survive this, then we will see next round. So this is what it is. And having said all this, the other piece is that we see a lot of consolidation, and this is also the time when you see that no more investment is coming up. I think it's better to consolidate and then merge with, like let's say like-minded, or let's say like similar sector kind of startups. They should come together. I think this is the best way to avoid further losses and then build on whatever you have. And so these are my, let us say, observations from my own experiences in the marketplace.
Thanks a lot, Bharat. Maybe Carson, can you, based on your understanding, can you highlight a couple of sectors which you think have received quite a lot of limelight? I mean, one could be, for example, digital health, but do you think that really matches in Germany?
Generally, yes. So I think, of course, and this is very obvious that everything digital or most of the digital things will have a chance to go forward, although there are some of the digital startups that are hit pretty heavily. For example, when you are in travel and want to combine individual travel tours around the world, this is something where digitization doesn't quite help your business model. So I think the situation is a little bit more tricky in terms of that there are not specific industries who are able to go forward, but if you have to look at every single business model in particular. So there is no general view in my observation that there's this industry is going forward and this is an industry is going hit very hard. For example, we have a company who is an automotive supplier, but they are an automotive supplier for e-mobility, and the entire automotive industry is more or less locked down, but the development units are working very hard to come up with a transition to e-mobility. So if you are in that space, even in a situation like this, you are able to get RFQs and close negotiations with one of the big OEMs here in Germany. So it's very, very specific, and you have to look at each and every company individually. And some of them who thought they were almost dead, they survived because they found a good way of easing or of adapting their business model to the current situation. For example, we have one startup here based in Nuremberg. They had an AI-based answering for restaurant reservations. So initially, when our restaurants were closed, their business was almost dead. But then they switched to use the same technology answering COVID questions for health organizations. And so they were able to make the switch rather easily, and now are serving these organizations with more or less the same technology. And they are now looking ahead for the restaurant market picking up, and the opportunity for them is even bigger because some restaurants have to have reservations before they can accept any customers. So it's very, very specific, and you have to find out as a startup, and this is the advice we give to startups. Check your business model very thoroughly and find out and make it COVID-19 ready, that you are able to work with the situation how it is right now, and expect for the situation to last for at least a year. This is something that startups initially they thought, oh, wait 3 months and then it will all be over. And now it becomes visible that this is very, very unlikely that this is going to happen.
Thanks a lot, Carsten. Actually, you also answered partially my next question, but I'll still like to take a few more views from you. So the next question is, I mean, if I look from the startup's perspective, what should be the background work they should carry out before approaching investors? So if you can take up the point from a VC's point, what would be like a background work which you expect from the startup, at least in the current scenario?
Me again?
Yes, that's right.
As I said, I mean, this is something we have to look into the entire situation. We had 10 years of bright sunshine in the German startup area, and many of the founders were simply not used to handle any crisis. And I think it took a couple of weeks or months to realize that this is a crisis that will not be over in 1 or 2 months, and that they have to work and potentially rework their entire business model to come up with a COVID-19 compatible business model. And the fast ones are very good on the road with these models. But this is something, before you approach any VC, you have to have a clear picture how your business will look like, or looks like right now, and will look like in the next year, under the assumption that in my view, the situation will not improve very much over the next year in terms of international business picking up and stuff like this. So you have to rework your whole financial model. If you have a business plan from February, don't use it to approach any VC. And we had some startups who tried it. This is my financial model from February. I know it has been changed, but we didn't have the time to really change it. This is not a good way of approaching your VC. You have to come up with a new model, probably taking out some of your planned international expansions, which probably is not going as quick as you wanted it, especially if you look outside of the EU. And this is something where we advise them to really rework the financial model and the business model if needed as well.
Thanks, Carsten. Maybe Andreas, if you can take up the point of the bank versus debt question, that when do banks really come into picture, and what should the startup founders keep in mind?
Maybe before I come to that point, just to get back also on the situation of the startups, just to give you a flavor of the composition in Germany. As of the recent statistics, we have already roughly 2/3 of the startups are actually digital models. I think that probably should not be much different compared to India. And 40% are already AI driven. And regarding the industries, roughly 30% are in information communications, and 10 or 11% are food and consumer goods. So they are more or less affected. As you know, food, shopping for food, cooking, home cooking has a boom. Consumer goods, not. If you order them remote, yes. And 9% are in healthcare, 7% are mobility, automotive. So in a way, we are in Germany. Startups seem to be prepared already quite well. I mean, regarding the regarding Corona, a new trend and a very visible trend. Roughly 40% of the startups consider themselves to be in sustainable, area to promote sustainability and so on. By the way, that is a trend not only here but also for investments, in funds or for our loan business as well. When we come to our own business, and we do not do investments, because that was also one of the questions I just received online. We do debt financing. And so basically, we cannot give debt to startups in a seed phase here because it's too risky for a bank. Here we are acting more as navigators because in Germany we have a vast ecosystem of public promotional schemes for direct subsidies, direct schemes, and also funding schemes by the bank with a lower interest rate, with grants and so on. So when we come into play is when startups are close to a real proven business model and solid revenues. Then we also can talk about debt financing, and then we can move even later. We have a tech team for scale ups, but I probably can come to that a little bit later. What we are doing here. So they basically we are looking. Was the startup already able to attract a first or a second round of venture? And then on the back of that and on the back of a proven business model with first revenues inside, we come into play. Besides that, of course, we can provide, let's say, the basic banking services, like account and credit cards and whatever you need for that. And we have dedicated staff and specialist teams.
Sure. Thanks, Andreas. Maybe from the angel investment perspective, Lakshmi and Bharat, can you take up that part? That what do you see that startup should carry out some background work?
You want me? Yes. Go ahead.
Lakshmi.
Go ahead.
Lakshmi, go ahead. You want me to go ahead? Okay.
Yeah, please go ahead.
Okay. So from our perspective, you see, this is already some of the points that we covered. You definitely have to do good homework about the slant, the preference of that particular fund, where they've been investing before, and what has been their investment thesis. And then, you should approach that particular investor. This is a well-known fact. And what you notice also is that some of the things that used to be there has been adjusted. And we see that due to the COVID and the present challenges that investors are facing, what is happening is that they're trying to see in what manner they are trying to overcome some of these challenges that are faced, let's say, before we make a decision. And then you can approach that particular, you look at the pattern, how that angel investor has been, or that particular group has been investing. And based on that, you can then approach that investor. Then you have a better chance. And maybe Lakshmi wants to add to it.
Yeah, so I think we're absolutely spot on in terms of understanding the investor's appetite sector, what kind of investments and all of that. Of course, that's definitely there. I think maybe Carsten and Andreas probably touched upon this. It will be interesting for an investor to now, especially the ones that you meet. Now, how did you really handle the crisis? Did you launch anything during the new crisis? Like they say, never waste a crisis. What did you do? That's something that I find very interesting to see, and maybe as a startup, it will be good for them to probably highlight and think about what they did differently and talk about it a little bit. The other one is also, I would suggest maybe it's not necessarily groundwork, but I think being more realistic about your valuation probably before the pandemic. You may have had something very different in mind in terms of how you want to raise your funds, your valuations. But I think you may want to be a little bit more realistic now about valuations. If your goal is to, really like tide through these difficult times, and actually emerge as a company or emerge as a successful startup that has a long run, then look at whether you're having the right investors and don't get caught up in the valuation. The other point I would like to suggest is also be a little bit more. You can be honest. That's in general, irrespective of pandemic or otherwise. I think we tend to have these Excels are just whatever you can do, whatever you want with an Excel, right? So I think that universal suggestion is to just be a little bit more real with your projections, be ambitious and aggressive, but don't think. Sometimes I feel like, at least I've seen some in the startups might think an investor may not see this or doesn't understand something. Could be a mix of reasons, but they tend to be a little bit over aggressively unrealistic. So I think that's something that you may want to be honest to yourself and also be more honest in your pitches a little bit about what challenges you might face. You don't need to cover up everything. I don't think investors are looking for, there is no such thing as a perfect startup. You're going to have problems. You're going to have to face them. And as investors, we are here to help you. Once we believe in you and we invest in you, we're going to just help you through all your challenges. So those are a few additional tips I have.
Maybe Lakshmi and Karsten, you can also highlight or give your thoughts about how should startups generally filter and narrow down on investors suitable for their purpose. If you have some quick 2 to 3 points on that.
You want to go first?
Okay. Lakshmi, you can go first.
Yeah. Essentially, in terms of how do you do your homework, I think we are having the luxury of so much public information today. That's the first very basic step. You have LinkedIn, you have, like, if they have a website, if it's a structured fund or an angel also, they have funds, investor, their details about, what investments they made in, look at those companies. If you have friends in those companies, or if some of the founders of the companies where the investor of your choice is invested, talk to them. You can, I think that's the best goldmine of information to do homework about the prospective investor. And then have a deeper understanding of the sector. I know you probably have, we've all, when we start our businesses, we're very passionate and we feel we know, but I think probably just understand that a little bit more when you meet your investors. Most of the other things in terms of, whatever you can get from secondary sources through your network, through your school network, I think if you can leverage that, those are the usual sources of understanding what your investor is looking for, and a lot of it is public information. Other than that, no specific, like, all very basic, right? Know what ticket size. If the angel investors got like 100,000 ticket size, then you don't go for $1 million. You can always ask, but just have that perspective. I'm looking to raise $1 million, and I'd like your support in being a part of this raise, right? So small things like that. These are all very softer aspects of it. But basic homework is a lot in the public domain, and then use your network, work the network to find out more information which isn't available offline. Try to understand the personality if you can. A little bit of their interest to build a rapport, because that's always a good thing. The same thing that we do for anything, to sell anything, right? If you're going for a job search, it's almost the same efforts you take. So nothing significantly different.
Thanks a lot, Lakshmi. Maybe you can go next.
There's not much to add. I think using public information and using their website is essential, and I would say the vast majority of the startups simply don't do this homework enough. There's so much information available about their investments, and you can identify their investment strategy. You can even develop ideas how your product and your service would go well along with 1, 2, 3 investments that they already did. And startups, in my view, they often spend more time selecting their new smartphone. They use more time for that than selecting their investor. And I think there's so much information available on their websites, and this is something that we really, really urge the startups to look for. Other than this, especially in the German market, I don't know how it is in India, try to find out a third person for a warm introduction to any one of the investment managers. don't try, ladies and gentlemen, or to whom it may concern, is definitely the wrong way of approaching an investor, at least here in this market. I don't know about India that much, but I guess it will be the same.
Thanks a lot, Carsten. Over to Andreas. Maybe if you can highlight in few quick points about how does Hypovereinsbank Bank or UniCredit helps the startups, and also if you can give some insights about the government-backed funding available for startups in the current scenario.
Yeah, Chubin, with pleasure. Before, just to add one thing that is, we as bankers are looking at probably more than investors is liquidity management. So capabilities of liquidity management. That is not only true for startups, also for, let's say, mid-cap banks, mid-cap corporates these days. Yeah, but the recommendation is really, we are looking even more on numbers. Yeah, than probably the investors. Try to onboard also someone that is really able to properly use tools for cash and liquidity management in these days. Yeah. So what are we doing? As just said, in the early phase, we are acting as navigators. We are also we are collaborating with by startup with Carsten very tightly. We have also a network of investors, of navigators. We know all the government, funds and schemes, and we are collaborating here with the startup to obtain these funds in the early phase. In a later phase, we have our own tech team where we have here the highest market share in Germany, covering scale ups. So startups starting from an implied market value from roughly 50 million euro, and here we are supporting scale ups in internationalization, in increasing working towards an IPO. You may know Delivery Hero, you may know Flixbus. I can mention it publicly because we're working with them publicly, and a number of similar names. At the moment, many of them are doing convertible bonds, for example, for their financing. So we are working with them, towards the exit and even beyond, and also on the other hand for the wealth management of the owners if they have been successful. Regarding government schemes in Germany, there was this famous bazooka from the Ministry of Finance, Ministry of Economics, of which there were 2 billion euro specifically reserved for the startup ecosystem. And the program consists of two main columns. One is for VC funds via KfW, which is the biggest state-owned bank in Germany. The KfW, with their subsidiary KfW Capital, they are doing matched funding with VC funds in order to make sure that the pipeline does not dry out. Yeah? And there's a dedicated online, application system you have to register, and then basically this is being investigated, and then the money flows. And the second column is on a regional basis. In Germany, we have 16 federal states, and there's a special program of up to $1 million US dollars, or 800,000 euro, roughly, of silent participation. So subordinated capital, that basically subordinated debt and capital that can be obtained by startups. There are certain criteria, so not everyone is getting it. It depends on the viability of the business model, obviously. But also here, and the amount is not, let's say, too high, but I think it's quite, let's say, reasonable. And these schemes have been starting in June, July, and now startups are queuing in the various federal states to obtain these funds.
Okay, thanks, Andreas. We are running a bit short of time. I would like to, we're still left with few questions, but what I would prefer now is have the closing remarks from all of you. But what maybe you can also include a point about scale up and what may be the points of resilience, which as an investor, you would, or for due diligence, would you like to add in your current screen for startups? In your closing remark, if you can include all of you, that would be great. So we have just 4 to 5 minutes left for the closing remark.
The last point, Julian?
Yeah. What we wanted to understand is, as an investor or a group, has the due diligence process changed, or if there are some new points which have been added from your side? Maybe Varad, if you can go first, then Lakshmi, then Andreas, and Carsten.
Sure, thanks. So one of the things definitely, right, how you're going to survive this crisis, how you've survived the last 6 months is going to be a good indicator. So that's what many investors are looking for right now. And so that is one point, right? I can tell you that going forward. And then you have to find about, like I said, right, to consolidate how to survive the situation. And then you have to look at partnering with like-minded organizations or startups with which you can then go to the next level. Now, talking about the global aspect, right, you told me about, there are two things, how you're looking at resilience. That aspect I've already answered. Going to the global part is like you have to find out, because really what has happened is the COVID has made complete reset. Whether you're a big company, whether you're a startup, or an SME, everybody's in the same level now. So what happens is that with this reset, can you do something about coming together with another like-minded startup? Because the problem that you're solving today in India, for example, can be applied anywhere in the world. So we see many of these issues, like social distancing protocols, right? So with these protocols, the security protocols you're talking about, with those incorporated, you can develop an innovation that can then be easily used elsewhere in the world. So that is, you have to find like-minded startup elsewhere, and that's the fastest way to, scale up. And so that's the second point I would like to answer.
Thanks a lot, Varad. Over to you, Lakshmi.
Yeah, I think Varad has talked about several ways people can. What I just want to add, nothing new, but I think people are so much more open now. So, like you said, it has reset the clock, and the size doesn't matter as much. So large companies are as open to collaborating with younger companies, smaller companies, maybe new companies, which perhaps in the past they would have been maybe a little less inclined to do so. And likewise, I think even within the same ecosystem, people are willing to share and do things together. Share resources is also, depending on how frugal they want to be. If they're smart, there are very complementary ways to share all of the many resources as well. So just wanted to add on to that, what he already mentioned. In terms of due diligence, obviously everything is a lot more digital than it was before, needless to say, and which would have, everyone. So that it's good because there's a lot of efficiency that has set in, especially a lot of things like financial due diligence and all that. That always need people to travel, and there was a lot of delays because people couldn't travel. So that has fastened the process of due diligence because of the entire aspect of more digital approach to it, which will most likely stay longer. And the other thing that has also happened is where startups have benefited and early stage companies have benefited because now they're also able to access talent from everywhere. They no longer also are as constrained on having talent, just here. There are some reasonably well-funded startups. I was talking to one of our investing companies, and they are like, we're looking for a CTO, and we're open to having a CTO from anywhere. He could be, he or she could be in the valley. So that's kind of a big shift in mindset for companies across the spectrum, not restricted to startups. So I think these are some of the broad changes over and above what Varad has said. I definitely agree. I think a lot more consolidation is yet to be seen.
Thanks a lot, Lakshmi. Over to you, Andreas. We just have 1 minute for each of you.
Now I leave over to Carsten because I mentioned already my point before.
Sure. Thanks a lot, Andreas.
Yeah, I think I can stay under the 1 minute as well. I think what is even more important for startups now is a very thorough analysis of the value chain in the market you are in. I mean, this has been important anyway before, but it has become even more important to understand your customer and your customer's customer and how they are impacted by the crisis and how they will probably handle it. And if you convey this, put this into your product and convey this message to your VCs, I think you are well off.
One
Thanks a
thing I
lot, Karan.
want to add is that,
Yeah.
this is just a small tip for companies that can afford it and want to create like a more permanent loyalty. This is the time to wow your customers, because I think the customers directly interacting with a lot of the purchase decisions now. So it was very different in the past, even when you were running digital businesses, right? So this is a great time to establish a little bit of a wow experience for your customer, delight them, go the extra mile if you can, wherever possible. And I think you really will build a lot of loyalty with your customers.
Thank you so much, Lakshmi. So with that, we'll just have a closure to the main discussion. I also wanted to highlight some of our next events. Um, yes, so we have another event on September 18, which is with Arunima Singh from Unit Social Business. Personally, I've known her, and I am pretty sure it would be a great conversation about understanding business, even from a global perspective in the current scenario. And then there's an event on October 9 focusing on cybersecurity. And you can always access all of this event through the Eventbrite links, which are normally shared through LinkedIn or Facebook and other channels. With that, I think I would also like to thank the entire team behind the events, what have been happening. It's been quite an effort from all of us, and I'm pretty sure next year we would also go again back to the physical events. We just lost a couple of minutes at the start, so I'm sorry for that delay. But I think we are nearly in time for the closure of the event. I want to thank all of the panelists, Varad, Lakshmi, Andreas, and Carsten. It's been back and forth arranging the time, but I think the event or the discussion was quite insightful and at least gave some hints to the participants and also us personally about how do you approach investor, how do you do your due diligence, or how do you do your background check. So that's quite insightful. I'm pretty sure there's a lot more to add. And I also think that participants can definitely reach out to you over LinkedIn or some of the other channels. With that, thank you, all of you.